So hi guys, welcome to the channel Learn Concepts with Nikil, Discover, Learn and Grow. So in this particular video, we will be learning about must know financial concepts for management consultants, guys. So you don't need to be, remember one thing, you don't need to be a financial expert or what you can say, you don't need to be a financial expert or accountant expert in order to become a management consultant, but you need to know basic financial concepts so that it can be easy for you while solving the problems, while solving the real world case studies, while solving the real world business problems, business challenges or cases. So yeah, so that is the reason why you need to know basic financial concepts which can help you in your management consulting career, right? So this is a lecture 21 and this is the fourth video, I guess. So this is the fourth video of the management consulting course part 2 playlist or course. Yeah. So let's jump into the video, guys. So why management consultants need financial concepts? I cannot see that headline due to Zoom pop-up, but I am assuming that the headline is why management consultants need financial concepts. So let's see why management consultants often analyze business performance, evaluate profitability, suggest cost saving strategies, and support strategic decisions. So in order to do all these things, management consultants need to have financial knowledge, at least basic financial knowledge in order to do all these things. Why? Because they will be analyzing business performance. They will be evaluating profitability. There are some frameworks like profitability frameworks, market entry frameworks, and all these things. So for these also, they need to know financial. They need to have financial knowledge. Suggest cost saving strategies and support strategic decisions. MA is nothing but mergers and acquisitions, investments, pricing. They will be giving advices. They will be giving strategies. They will be developing strategies, and they will be giving recommendations based upon these. So they need to have some basic financial concepts knowledge. So a basic understanding of finance is crucial. So top financial concepts every management consultant needs to know. First is revenue and profit types. So revenue is nothing but total money earned by selling total goods or services. That is nothing but revenue. So that is one of the concept. These all come under revenue and profit types. So next is gross profit. Gross profit is nothing but revenue. Revenue, we have calculated the revenue, right? Revenue is nothing but total money and by selling goods or services. That is revenue, and gross profit is nothing but revenue minus cost of goods sold. Like there will be a cost, right? Cost associated for selling the goods. So gross profit is nothing but a revenue minus cost of goods sold. Next is operational profit. Operational profit, we call it as a EBIT. EBIT is nothing but a earning before interest and tax. We will be talking about EBIT too in the future slides. So operating profit, we need to know the concept of operating profits. Operating profits is nothing but a gross profit. Gross profit we have calculated in the second step, right? Gross profit minus operating expenses, right? There will be expenses for operating, right? So gross profit minus operating expenses is nothing but operating profit. That is also called as EBIT. Next is net profit. Net profit is nothing but a final profit after all costs, taxes, and interest. So that is the net profit, right? So we need to have the understanding of revenue and profit types. That is nothing but revenue, gross profit, operating profit, as well as net profit used in profitability analysis and pricing strategies. So basically management consultants will be using these concepts: revenue, gross profit, operating profit, and net profit for analyzing and for analyzing and for giving suggestions and recommendations related to profitability analysis and pricing strategy and all these things. So this is one of the concept. Second is cost structure. Management consultants also need to understand the cost structures. Cost structures are divided into two types of fixed costs as well as variable costs. Let's see what are fixed costs and what are variable costs. Like what are what karke. So let's see what are fixed costs. Don't change with the production. That is nothing but the rent salaries. Salaries also will be not changing. Rent also will be not changing. In the previous year, you will be giving the same rent. In the previous month, you will be giving the same rent. In this month also, you will be giving the same rent. Same goes with the same applies with the salaries. In the previous month, you will be giving the same salaries. In the present month, you will be giving the same salary. So these won't be changing with the production, right? Variable costs will be changing with the production, like raw material costs and all these things. Raw material costs will be varying, right? They are variable, but rents and salaries are, they are not variable, they are fixed. So cost structure are divided into two types of fixed as well as variable. So you need to understand fixed costs, what are fixed costs करके and what are variable costs करके. Total cost is equal to simple fixed costs plus variable costs. So this is one of the concept management consultants needs to know. Like they needs to be perfect with. So next is break even point. Break even point is nothing but where the total revenue is equal to total cost. So there is no profit or no loss. In movies you will be listening, right? This movie has crossed the break even point करके. Once you have crossed the break even point, you will be getting the profits, right? Break even point is the one where you will be not getting any profits or any losses. It is equal to total revenue is equal to total cost. Once you have crossed the break even point, you will be entering into profits. Formula: break even sales is equal to fixed cost divided by selling price minus variable cost per unit. So this is the formula for break even point. So break even point helps consultants assess the risk and feasibility of the new products and business units. As simple as that, right? Next is EBITDA, EBITDA, right? EBITDA is nothing but earnings before interest, taxes, depreciation, and amortization. Depreciation is nothing but the value of the product will be reducing over the time. Depreciation is used for tangible products. Amortization is used for intangible products. So for example, let's take this laptop. I'm saying the classes in laptop, right? So in 2023 or 2022, I have brought this laptop for 40,000, but it won't remain the same cost. It won't be having the same price even now. Why? Because the value of the laptop has reduced because of the usage, because of the wear and tear and all these things. So depreciation is nothing but the value of the product will be reducing over time. Same as this laptop, the value of the laptop will not remain 40,000. It will be reducing over time because of its usage and wear and tear and all these things. Depreciation is used for tangible products. Amortization is used for intangible products. As simple as that. So management consultants need to know the concept of EBITDA too, right? Key measure of core business profitability, often used in valuations. Valuations are nothing but it is used to know the worth of the company, to know the value of the company. We will be learning about valuations too. Consultancy use this in due diligence. Due diligence is nothing but information, gathering information. It's like a detective process, right? M&A is nothing but mergers and acquisitions and cost optimization products. So, EBITDA, earnings before interest, tax, demonetization, depreciation, and amortization. The management consultants needs to know EBITDA because these all are the EBITDA is used in due diligence, M&A, and cost optimization projects and all these things. So management consultants needs to know this financial concept to EBITDA. Next, financial statements overview. So every company has three financial statements. Yes. One is income statement. Second one is balance sheet, and third one is cash flow statements. Income statement is nothing but it shows the profit or loss of the company. It shows the profit or loss over the time. As I said you before, it shows the profit or loss of the company. What is the income of the company? Karke. Next is balance sheet. It shows the assets, liabilities, and equity at a point of time. Assets are nothing but what the company owns. Liabilities are nothing but what the company owes. Right? Listen carefully, guys. Assets are nothing but what the company owns. They are the place for the company. Liabilities are nothing but what the company owes. What the company owes, which company needs to give. They are the negatives of the negatives, minus of the company. Assets are the positives, plus of the company, and liabilities are the negatives or you can say minus of the company. And equity at a point. Equity is nothing but a difference between assets minus liabilities, right? So balance sheet shows the assets, liabilities, and equities at a point in time at a point of time. Next, cash flow statements tracks cash movement in or out. Whether the cash is coming in or whether the cash is going out. It is nothing but cash flow statement. Flow of the cash in or out. Consultants use these statements to analyze business health and cash position, right? So yeah, business health माने तो like is the business performing good or not करके, whether it is in the good position or bad position करके. Next is ROI and ROE. ROI stands for return on investment, and ROE stands for return on equity, right? Return on investment माने तो if I am keeping some investment, what are my returns? So formula is profit from investment divided by investment cost. That is a formula. And for return on equity, net income divided by shareholder equity, right? Shareholder is nothing but they will be having some stake in our company. Used to measure efficiency of capital use. So seventh one is working capital, guys. Working capital is simple. Current assets minus current liabilities. It is the difference between current assets minus current liabilities. Equity माने तो assets minus liabilities. Na working capital is the difference between current assets minus current liabilities. As simple as that. So tells if a company can meet a short-term obligations, a short-term goals and all these things. Short-term obligations. So crucial for operational analysis and liquidity improvement. So this is the use of working capital. So let's see the eighth financial concept where management consultants needs to know. Next, valuation methods. Valuation methods are nothing but as I said you before, the seventh or sixth point I think so. It is used to assess the value of the company. It is used to know the worth of the company, value of the company, so that I can invest in the company or not. Okay. DCF method is discounted cash flow method. Comparable company analysis and precedent transaction method. These all are the methods used for valuation, to know the valuation of the company, to know the value of the company, or to know the worth of the company. I'll be explaining about all these things in detail in my investment banking course, guys. Maybe I may take 1 to 2 months or 3 months to teach you investment banking course. Why? Because there are lot of courses in the pipeline, like artificial intelligence courses. There are product management course. There is product management course. There is Power BI courses. So there are many, what you can say, there are many courses in the line. So after 3 to 4 months, I will be explaining you about investment banking course. In that investment banking course, I will be explaining you about all these things, guys. So yeah, used in a M&A investment pitches and strategy cases. As simple as that. Next, ninth one is contribution margin. That is also one of the financial concept management consultant needs to know. Formula: selling price minus variable cost in brackets divided by selling price. That is a formula of contribution margin, right? Helps in pricing, cost cutting, and deciding which products to focus on. It's like a BCG matrix, right? BCG matrix is nothing but on what product portfolio I should invest karke. It's something like that. Next is budgeting and forecasting. So you need to know budgeting concepts also. There are some budgeting concepts like NPV, net present value of the money, and all these things. So we need to learn all these things. So we need to be perfect with all these budgeting and what you can say forecasting techniques too. So yeah, these are the important concepts, important financial concepts. Management consultant needs to know because it will be becoming easy for them in order to solve real world case studies or real world problems, challenges, or real world cases. So what are the final takeaways? Let's see. Consultants don't need to be accountants, but must interpret financial data. As I said you before in the first slide only, I said you consultants don't need to be financial experts or financial subject matter experts or accountants, but they need to do interpretation of financial data. By learning these 10 concepts, they will be easily doing the interpretation of financial data and all these things. It will be easy for them. Use financial insights to solve business problems. As I said you before, they'll be using financial insights so that it will be easy for them to solve the business problems, real world business problems or real world cases. Next is always align finance with business strategy. So finance and business strategy should be in the same page, right? So these are the important concepts of important financial concepts which management consultants needs to know. So after this video, from the next video, we will be learning some more case studies, guys. We'll be focusing more on case studies from the next video. Like there are different case type frameworks. There are different case studies like profitability optimization case study, market entry case study, market expansion case study, mergers and acquisition case study. So we will be learning about all these case studies in detail from the next video. So bye guys. After the case studies, we will be directly jumping into Guesstimates and all these things. So bye.